Ladies and gentlemen, good day and welcome to the GMR Airports Infrastructure Limited's conference call to discuss the Q1FY24 results. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us today Mr. Saurabh Chawla, Executive Director of Finance and Strategy. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Also, recording or transcribing of this call without prior permission of the management is strictly prohibited. I now hand the conference over to Mr. Saurabh Chawla for the opening remarks. Thank you, and over to you, sir.
Good evening, everyone. I'm delighted to welcome our shareholders, analysts, and all other stakeholders to our Q1 fiscal year 24 earnings call. I really appreciate you joining at this late hour. Before we delve into our company's quarterly figures and achievements, I think it is essential to situate our performance within the overarching narrative of India's infrastructure, particularly the aviation sector and broader economic context. Post-pandemic, our economy has shown signs of resilient recovery. India's economic trajectory is promising, characterized by steady growth rates, enhanced manufacturing, and a favorable investment climate. Notably, infrastructure remains central to this growth story, acting as both a driver and beneficiary. India's thrust towards infrastructure development isn't just a policy choice, it's a strategic move to catalyze holistic development. With programs like Atmanirbhar Bharat and National Infrastructure Pipeline, the nation has showcased its ambition, ushering in investments and innovations. Our airport projects have been pivotal. Beyond mere transport hubs, we see them as India's gateways to global commerce and culture. Our commitment to redefine the traveler experience remains undeterred. Technology integrations, sustainability initiatives, and passenger-first approach have not just elevated user experience, but also set new industry standards. Amidst this macro backdrop, our journey over the past quarter has been both strategic and transformative. We've leveraged technology, sealed key partnerships, initiative to simplify the corporate structure through the merger process, and continue to enhance operational efficiency across all projects. Like every growth journey, ours hasn't been devoid of challenges. From industry disruptions to regulatory changes, we have navigated a diverse set of obstacles. Yet every challenge has unveiled an opportunity, be it in terms of innovation, new partnerships, and process optimizations. We are excited and fully equipped to harness these prospects, amplifying our growth and contributions. With this note now, I would like to briefly run you through our Q1 fiscal year 24 performance. We began the new fiscal year first quarter with a healthy growth on operational and financial parameters. GMR Airports Infrastructure Limited's gross revenue increased by 40% year-on-year to INR 2,018 crores in Q1 fiscal 24, driven by strong growth in traffic at our operational airports. EBITDA increased by 77% to INR 753 crores, with EBITDA margins at 51%, up 10% year-on-year, reflecting a strong growth in the business and underpinned growth drivers. Net profit after tax from continuing operations of about 16 crores in Q1 fiscal 24. On the operational front, we are seeing strong momentum in traffic and expect this upward trend to continue further. In Q1 fiscal 24, overall PAX traffic increased by 26% Y-on-Y to 27 million passenger traffic, and it has surpassed the pre-COVID levels. That is, Delhi and Hyderabad airports have crossed 14 and 12% more in Q1 fiscal year 20 respectively. During the quarter, in addition to healthy growth of domestic traffic, international traffic has also increased substantially. Delhi and Hyderabad Airport international traffic increased by 35% and 33% respectively. In its continued growth trajectory, Hyderabad Airport handled highest quarterly passenger traffic in Q1 fiscal 24 and crossed the 6 million passenger mark. Now I would like to highlight the key developments of the quarter. We are steadily progressing on the merger of GMR Airports with GMR Airports Infrastructure Limited, which will ultimately enhance the shareholder value. In this context, varied steps have been achieved, paving the way further for the entire merger completion within the expected timeline of fiscal year 2024. We have already received the CCI approval during the quarter 4 of 23, and recently we received a no objection to the merger from RBI and both the stock exchanges. Now the merger application is expected to be filed shortly with NCLT. Significant progress has been achieved with respect to capacity expansion in our Delhi, Hyderabad and Crete airports. As of July 31st, 2023, Hyderabad and Delhi airports achieved 92% and 93% of capex progress. Delhi and Hyderabad airports are targeted for completion in Q3 fiscal 24 and Q2 fiscal 24. A brief glimpse of the same is available in our investor presentation for the quarter. We expect the new tariff regime at Delhi to be enforced by April 2024. We achieved historic milestone in Delhi Airport. We inaugurated the 4th runway and the Eastern Cross Taxiway on July 14, 2023. Delhi Airport becomes the only Indian airport with 4 operational runways and elevated cross taxiway, which will aid in Delhi becoming an attractive hub along with our sustainability journey to becoming a net zero carbon emission airport by 2030, reinforcing its preeminent position in the Indian aviation sector. Mopa or Goa Airport is also fully operational. Domestic flights had already commenced from January 5th, with Indigo, Akasa, SpiceJet and Vistara are now operational and expanding their footprint. International operations also started on July 21st with Air India operating international flight from Mopa, Goa to London Gatwick 3 times weekly. Cumulative traffic at Mopa Airport has already crossed 1.9 million mark as on July 31st. In the month of July, Goa Airport welcomed 2,000 international passengers. We are also expecting the new tariff regime at Mopa to be enforced in Q3 FY24. On the regulatory front, Telecom Dispute Settlement and Appellate Tribunal, TDSAT, has pronounced its order on July 21st with respect to our appeal preferred by Delhi Airport against the orders passed by Airport Economic Regulatory Authority, AERA, towards tariff determination for Delhi Airport for the second and third control period. TDSAT in its order has allowed certain claims of Delhi Airport and has disallowed certain other claims. The matter is still to achieve its finality. Hyderabad Airport on June 6th announced the divestment of about 818,000 square feet warehouse facility at Hyderabad Airport to ILP Core Ventures Private Limited, a step-down subsidiary of Indospace Core Private Limited. The said transaction reinforces the GMR Group's capabilities in developing world-class institutional-grade real estate project assets and generating value through successful exit. GMR Hyderabad Aviation SEZ, a 100% subsidiary of GHAIL, has recently signed a land lease agreement with Safran Aircraft Engine Services India Private Limited, a subsidiary of Safran, a global leader in aircraft propulsion and equipment, space and defense markets. As per the agreement, GHAIL will lease land to Safran to operate engine MRO facility for LEAP turbofan engines, spread over 23.5 acres of land parcel within the SEZ area of GMR Aerospace and Industrial Park. This facility will occupy around 36,500 square meters of built-up space. The construction of the facility will commence in September and is expected to be handed over in December 2024, with operations set to commence in 2025. The facility in Hyderabad will be the largest MRO center in Safran aircraft engines network. On airport land development, in Delhi Airport, we have initiated self-development of commercial building of about 6 lakh square feet in the Gateway district of Aerocity. In Hyderabad Airport, it has initiated development works for GMR Interchange, which is a retail project. In Mopa Goa Airport, land monetization processes for 2 hotels were successfully completed, with letters of intent to award issued to the 2 highest bidders. In Bhogapuram Airport, foundation stone of the airport was laid by the State Chief Minister on May 3, 2023. EPC bid evaluation is currently under process. R&R processes have been fully completed. Grant of right of way over airport land from the authorities under process. Financial closure is expected. It is in advanced stage and expected soon. The sanction of our lead bank is already in place. Nagpur Airport, the review petition was filed by Ministry of Civil Aviation and Supreme Court challenging the earlier Supreme Court order. However, the petition was dismissed by the Supreme Court in its order dated May 11, 2023. We expect execution of concession agreement at the earliest. On Medan Airport, on a year-on-year basis, traffic is up 62% to 1.8 million passengers in Q1 fiscal 24. Currently, 18 domestic and 6 international destinations are connected in Medan, and we're working steadily towards adding new destinations. We have continued our rigor on the ESG front at each of our airports. GMR, in its strategic vision of nation building through future-ready sustainable airports, ensures that the principle of sustainable development is fully imbibed in unique and innovative infrastructure development or day-to-day operational activity which we undertake. In this direction, Delhi Airport added another milestone in its sustainability journey of becoming a net zero carbon emission airport by 2030 by inaugurating the 4th runway and the Eastern Cross Taxiway. While the 4.4-kilometer long runway will enhance the operational efficiency at Delhi Airport, the Eastern Cross Taxiway will help lessen aircraft emissions and additionally reap in several other benefits inter alia, reducing about 55,000 tons of carbon dioxide emission, which is equivalent to planting about 15 lakh trees. Hyderabad Airport too continued its sustainability journey and transitioned to 100% sustainable green energy for its energy consumption at the airport and across its ecosystem, which will reduce its carbon footprint by about 9,300 tons of carbon dioxide annually. Delhi and Hyderabad airports have maintained an ASQ score of 5 during this quarter. In conclusion, as we move ahead in 2023, we are not only just geared to navigate the challenges, but also to seize the myriad opportunities that the evolving Indian and global aviation landscape presents. I express my deepest gratitude to our investors, partners, and team members for their continued trust and support. Together, we are forging a path that is exemplary in the annals of Indian aviation journey. Now, I would like to open the floor to Q&A. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Hello. Yeah, hi. Good evening, sir. and thanks for the opportunity. My first question is on the TDSAT order, which was very, very favorable to our Delhi airport. My question is, what is the status and way forward, and what could be possible financial implications? Any color would be helpful.
GRK Garu, would you like to answer this?
Yes, sir. I think TDSAT order has been received. I think as we explained that it has to reach the finality. In the meantime, since the DIAL is going to file the application for the fourth control period, and which is expected to file in the third quarter of this financial year, we'll incorporate the TDSAT order if there is no stay from the Supreme Court in the meantime. Then we incorporate and then file the application. The quantums are being worked out, and it will be very difficult to state currently what will be the quantum of the increase that we are expecting.
So has the DIAL has the ERA filed this the petition in the Supreme Court against the order?
No, DIAL because there are certain favorable orders that some are not favorable. We are examining the issues not favorable, whether we should go for appeal or not. The legal is examining that aspect. What I am trying to explain you is that there are so many stakeholders who are available who can go to the Supreme Court, because the next appeal lies with the Supreme Court. Either airlines can go or any other person who is getting affected because of the tariff, they can go to the Supreme Court. All stakeholders are permitted to appeal.
Understood, sir. My second question is, sir, you raised money of 12 billion through NCT at Delhi airport and 20 billion at Goa airport, if I'm not wrong. Was both the paper was for refinancing, or one was for the expansion and the other was for refinancing of the existing debt?
12 billion what Delhi airport has raised in the month of June is as part of the phase 3 expansion which is happening now. With that, for the entire project cost till today approved by the board is about 11,550 crore has been fully tied up. As far as the DIAL is concerned, Goa right now we are in the process of thinking of going for refinancing. Otherwise, we have not raised any money as far as the Goa is concerned in the last quarter.
Understood. So my last question is, how was the traffic in last 45 days? Are you seeing the same momentum continuing?
The traffic, you are talking about Goa or as a whole?
No, traffic at the Delhi and Hyderabad.
They are doing very well. Both of the I think. Yeah, sorry, you can explain.
Let me take this question. The traffic is as per our forecast, internal forecast. Obviously, there is seasonality in traffic because the second quarter usually is a little bit subdued. But I would say that the delta over the previous year continues to be maintained.
Understood. Thank you, Mr. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Sai Siddhartha Pasupuleti from Kotak Securities. Please go ahead.
Yeah, hi sir. Am I audible?
Yes, you're audible, sir. You may go ahead.
Yes, you're audible.
Yeah. Congratulations on a really good set of results, sir. So my first question would be your retail and non-aero revenue per pax for Hyderabad airport have been a bit volatile over the past few quarters. So if you could explain us any seasonality effects as in how to think about a stable level of spending for the same.
Yeah, Kika, you want to take this?
Yeah, I can take it. As far as Hyderabad is concerned, actually the non-aeronautical revenue is doing very well. There was some fluctuation between the fourth quarter and first quarter because in the fourth quarter, some of the revenues, especially duty free, was getting at a higher revenue share, about 35%. In the first quarter, we moved down to 23% because In case of Hyderabad duty free, the revenue share is depending upon the turnover which they achieve. If they achieve more than 65 crore rupees, then only they come into 35%. That's why in the last quarter of the Hyderabad, they got higher revenue, Hyderabad airport. The second point is that some of the rent yielding assets have been transferred to some other company, and the money has been raised by Hyderabad airport. As a result, there was some lesser revenue coming from the rentals in case of Hyderabad airport. That is where there is a slight volatility or difference between fourth quarter to first quarter. Otherwise, Hyderabad airport is doing very well, and the spend per passenger is also good. Only in case of the duty free, has slightly fallen, but it is now picking up much better. I think we will see a good momentum going forward.
Yeah, thanks, sir. Just a second question on following up. Your other expenses have also been quite volatile with first quarter spends lower than the, let's say, third quarter. So if you could share some reasons on the same, and also why the associated profit is growing at the pace as it is growing at the moment.
In case of Hyderabad, yeah, you want to take Saurabh or can I explain?
Why don't you go ahead?
Yeah. In case of Hyderabad, in the fourth quarter, there were some exceptional expenditure has been incurred. There were of the write-off of the amount received from Yes Bank, about 63 crore rupees. And also we did the refinancing of the bond where we have made the hedging has been cancelled and the notional loss has been booked, and some legal expenses have also been booked. As a result, in the fourth quarter, the Hyderabad expenditure was very high, whereas whatever we have incurred in the now first quarter is now the standard expenditure that we have incurred. That is the reason why in the first quarter versus third quarter, there was a fall in the expenditure in case of Hyderabad airport. And going forward, we are expecting that we will be maintaining more or less the first quarter expenditure. We are now very conscious about booking every expenditure properly over a period of time. So we will not see such type of differences going forward.
So this will pertain to all the assets, sir? Or only
all our exceptional expenses incurred in the fourth quarter.
Okay.
So Mohit, maybe we can quantify those. If you want, we can highlight that aspect. Ashok, you want to do that?
Yeah. So these were some of the one-offs which we have recorded in the previous quarter, which is some provision we have made for the receivable to the extent of 65 crore, and some loss on settlement of derivative instruments we have recorded, and some loss on discarded assets we have recorded, about 20 crore, and some forex loss on the CCPs, which around 27 crore we have recorded. And there were some closing provision we have made for some of the expenses related to the arbitration, which is approximately 100 plus crore in the financial statement of March 2023. So these were not there in the June quarter.
So I think, just as a guidance, we are basically back to our normalized levels, and you should expect similar levels to continue.
Okay, thanks, sir.
Thank you. Ladies and gentlemen, you may please press star and 1 if you wish to ask a question. The next question is from the line of Bharat Jain from ICICI Securities. Please go ahead.
Thank you for the opportunity. Can you tell us what was the Delhi duty-free top line in
Your voice is very low.
We can't hear you, Bharat.
Hello? Is this better?
Yeah, much better, yeah.
Yes, sir. Can you tell us the numbers for Delhi duty-free, the top line and the profit in the quarter?
Yeah, just 1 second. Rajesh, you want to take this?
Saurabh, I don't have the number readily with me.
Okay, just a second. Just a second, we'll give the numbers. 1 second.
Yeah. So the top line is 448 crore for June quarter, and it was 421 crore in the March quarter.
Okay, sir.
Yeah.
Sir, and the profit?
And the profit, it's a profit and loss before tax, it is coming 86 crore in the current quarter, and previous quarter it was 84 crore. And at PAT level, it is 64 crore and 98 crore in the previous quarter. So previous quarter, we have recorded one exceptional item, which is on account of the GST refund. Yeah.
GST refund. Got it. Sir, and sir, can you give us some color on how you are planning to increase the rate of SPP spend in duty free?
Rajesh, this is
Yeah.
your...
Yeah. Yeah, sure, sir. So, Bharat, in terms of our plan to expand, increase SPP, there are various factors, we discussed in the previous calls also. Primarily, one is, you bring in the right kind of offerings, considering the mix of traffic what you have. Secondly, like what we have done recently in Hyderabad, and where we have seen almost 20% jump in the SPP, where we have expanded the duty-free area. So these are the two key factors which contributes, and naturally the other one is linked to the inflationary and the price-linked factors which increases the SPP. So these are the three time factors for which undergoes for increase in SPP.
Okay, sir, understood. So, sir, if okay, just one clarification. The cosmetics, do we tend to earn more margins on cosmetics?
Generally, on perfumes and cosmetics, when you compare with the liquor, the margins are slightly lower. Slightly lower. I won't say very significantly lower, but especially when you compare with the liquor, yes, those are slightly lower.
Okay, sir, understood. Thank you very much, sir. That's all from me.
Thank you. The next question comes from the line of Sai Siddhartha Pasupuleti from Kotak Securities. Please go ahead.
Yeah, thanks, sir. Thanks for the follow-up. So I just had one final question. So the associate profits have been growing quite year-on-year as well as quarter-on-quarter. I wanted to know the reasons associated with it, and also the interest cost has come down on a QOQ basis for Delhi and Hyderabad airports. So what is driving this decline would also be helpful.
Yeah. Actually, in previous quarter, there was a loss we have recorded for the Bajoli Holi. So during the quarter, the performance of the Bajoli Holi has been improved. So it's mainly because of that the profit has been improved, and other associates and JVs are also performing better in the current quarter.
Interest cost.
Interest, there is no reduction as such.
Okay, sir. That would be all from my side, sir. Thanks.
Thank you.
Thank you. The next question is from the line of Sriram R, an individual investor. Please go ahead.
Thank you for the opportunity. Sir, I just have one question. Regarding the...
Sir, sorry to interrupt, but the line for you is not very clear. I request you to Go ahead, sir.
Am I audible now?
Yes, this is much better, sir.
Yeah. So I just have one question. So this is regarding the Noida airport, which is coming up in FY25-26. I mean, what sort of impact that would have on the Delhi side?
So honestly speaking, given the growth that we see in the aviation sector, over a period of time, we would need more airports in the country. Noida will be a welcome change. It will take a lot of burden off the Delhi airport. In our strategy, we have always seen Noida taking our tier 2 traffic away and some part of the cargo traffic away. But Noida going live is still 2 to 3 years down the road, by which time we would be hitting our capacity levels, and it will be a good time for us to concentrate on more high-yielding traffic rather than low-yielding traffic. So honestly speaking, will not have too much of impact as long as India keeps growing at around 6 to 7% on a secular basis.
Thank you. That answers my question.
Thank you. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Hello, everyone. I hope I'm audible to you all. My question is linked more to the EBITDA reported in the third quarter, in the current quarter, which is about 7.5 billion rupees. In fact, about 7.5. Now, this is meaningfully higher than the run rate seen in the 9M FY23 kind of time period on a quarterly basis. Potentially almost double of the quantum seen last year in the first 9 months on a quarterly basis. I wanted to kind of confirm or clarify, is there any one-off inside in the first quarter print of EBITDA, or should this be a sustainable number going forward?
GRK Garu, you want to take this or should I take it?
Yeah, I think as far as the financials this quarter are concerned, there are no one-off as such. It is an actual real performance. The revenues have substantially gone up, and the increase in the profitability and turnover is mainly because in case of Hyderabad Airport, in addition to the traffic going up, the tariffs have also gone up compared to the previous year. This year the tariffs are almost 1.6x. As a result, you got a better turnover, and that will continue for the next 2 years until they go back into the blue. Otherwise, there are no one-off anything this time, and they're all very clean, and we're expecting the same type of performance going forward, and we may add anything else sort of.
Yeah, so in addition to what GRK Garu just said on the Hyderabad, there's also increase in the CPD revenues of DIAL on account of new contracts with Bharti Realty. So that is, on account of taking over taking over the new land parcels in Aero City. So basically, that's the booking that has happened, which has increased the EBITDA levels.
Understood. Again, on the aspects that you have said, the first one, which is Hyderabad Airport's aero tariffs going up. Is it fully reflected the impact of in fact both the factors that you said, which is Bharti Realty and Hyderabad Airport's aero tariff going up, are they kind of fully reflected in the quarter gone by, or would we see a further impact on the positive side incrementally?
No, as far as the increase in the tariffs is fully reflected in case of Hyderabad Airport. Bharti, the second phase of the 2.13 million square foot, which they have taken over, and the current quarter revenues have already been booked, and they will continue to be there. So there is no change as such.
Understood. And in case of Hyderabad Aero tariff, post a 2-year period that you were suggesting, do we envisage tariffs coming down in a base case scenario? How do we see through the numbers of...
Basing on the current tariff structure which is approved by the TDSAT, which is now under implementation, 23, 24, 24, 25 and 25, 26. So this tariff will remain almost the same. And 26 annual, again, the HAL has to file another application for post-control period. And basing on the that point of time and the capex involved in everything, again, tariff determination will happen. It will be very difficult to guess what will be the tariff with the post-control period. Otherwise, next 2 to 3 years, the run rate will continue to be the same.
Understood. And since there are several aspects because of which Hyderabad's EBITDA is actually going up, as you suggested through the call, is there a sense of any kind of dividends that will be distributed away from that airport?
Basing on the current covenants under the bond covenants, right now this financial year appears to be difficult, but next financial year onwards, then Hyderabad Airport will be in a position to declare the dividend.
So Aditya, basically we are on path, like I highlighted earlier also, that as we continue on our path of generating free cash, the effort will be for dividend flows by the airport asset companies to the platform. And of course, the merger of GAL into GMR Airport Infrastructure Limited, GAIL, would be very helpful to upstream those dividends. First off the block will be Hyderabad. Whether it happens during this current year or next year, I think let's just wait it out. We prefer not to give any guidance to the markets on that. Performance itself will demonstrate it.
Maybe the final question on my side, if I may, again relates to Hyderabad Airport because interesting things are happening. Is there a case of you taking out the stake of the government entity over here? And B, as we have seen in case of Delhi, is there a case of the CGF issue turning out to be in our favor and from a regulatory perspective, we benefiting?
No, first, what is the first question? Sorry?
So I think 26% stake is still held by the government entity over here, right?
Yes.
Is there a case of that?
Aditya, there is no proposal of the government to sell its stake. There's nothing which is formally there. So we really can't react to any speculative thought process. If there is a proposal in place, obviously we will look at the merits of it and ensure that we participate in it. Having said that, our overall philosophy, Aditya, is to be capital light. So unless and until there's a good arbitrage in the value, why would we participate in it? We would prefer to partner with some of the financial majors who may come and participate to buy out that stake. But there is no current proposal by any government authority to sell their stake, whether in Delhi or Hyderabad or any other airport across the country.
And any option value from any regulatory positives that come in from Hyderabad, especially the CGF issue, timelines and probability, if you could share?
That the appeals are pending before the TDSAT. Now the Hyderabad Delhi Airport hearings have been completed. We got the order. TDSAT is now hearing the Mayal case is going on. So most probably they will take it up in the queue than Hyderabad. So CGF is being fought before them, and we are actually. And we continue to agitate before the TDSAT for a favorable order.
Understood. Those were my questions. Thanks a lot for the time that you gave me. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. Participants, to ask a question, you may please press star and 1 at this time. The next question is from the line of Paras Vasa from Om Investments. Please go ahead.
Yeah, once the capitalization of the current expansion is done, how much interest cost and depreciation will go up for the Hyderabad airport as well as the Delhi airport?
In case of the Delhi, the depreciation, which is currently about 500 crore rupees, can go up to almost 1,000 crores. And interest can be, once we complete the entire capitalization, the interest amount could be in the range of about 1,400 crores.
And the same for Hyderabad?
In case of Hyderabad, the current depreciation about 230 or 300 crore rupees will go up by almost double because of the 6,700 crore capitalization. Interest cost will be around 800 crore.
I see. Thank you.
Thank you. Ladies and gentlemen, we have no further questions. I would now like to hand the floor over to the management for closing comments. Over to you, sir.
Thank you. Thank you, everybody, for joining on our Q1 call at this late hour. Appreciate your questions. The team, of course, is available offline to answer any other specific queries you may have on the data that we have published so far and any strategy questions that you may have as we go forward. Thank you so much. Have a good night.
Thank you. On behalf of GMR Airports Infrastructure Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.